So if I look at yesterday's loan, let me just quickly go through it again. I said to you, remember, this bank here consists of what I pay off on the original loan amount and what I paid on the interest. Okay. So, I know, if I want to know how much did I pay off on the loan itself, I can either take the opening less the closing, or I can take the bank less the interest. And as you can see here, both of them shows me 12,750. And if we look at the transaction, so that means this is how much I paid off on the loan. So if they said that next year I'm going to pay off the same as this year, it means my short-term loan would have been 1,21750. But they don't say that. They say that the part that I'm going to pay back next year, can you see the language they use? The capital portion, meaning the part I pay on the loan itself, not the interest, will increase with 10%. Okay, so I want to calculate the 10%. And the 10% would be 110 over 100, because I add 10% to the existing amount. And that gives me what? 9. Like that. Okay, so now if I go here, I want to take the closing balance, which is the 1159, and I want to subtract the short-term loan, meaning the part I'm going to pay back next year, a payable. So I put that there. You see? Always have them both there and show them, because one of the two is going to be a bagel. Okay, so what's my loan? Anybody? Okay, so I block and top. So let's go on. The next one, please stop talking. The next one they ask here, after the loan, is they talk about the shares and the dividends. So the only thing I want is, if I look here, they already gave me the shares. The ordinary share capital is already given. So the only thing I still need is this final dividend here. Right. So let's see. They give me the last day of the month, there was 150 shares in issue. And they only say a final dividend was declared. Okay. But then they give me a third one that says, what is the total dividends? So I know interim plus final gives me total. I am looking for the final. So can you see, if I have the total and I have the interim, I can get the final. So they gave me the total is 345. So I'm still going to do it here. 345. And it's totally legit doing it like I'm doing it here, because they can see that you have a calculation. And now I'm going to look, did they give me an interim? So the first place I will go to is my trial balance, my list of balances. And if I see right at the bottom, it's usually right at the bottom. If it's not right at the bottom, it will definitely be in the nominal section. In the nominal section, I see there's dividends. And they even tell you it's interim. They don't even have to tell you it's interim. You have to know if there's dividends in your trial balance, it is the interim. So they gave me the 207. So it means the balance is my final. So I took the total less the interim, and that will give me my final, which is what? 1? Okay, yes, Emmanuel. Clear. So if I look, what is my steps? I pay the final from last year. Ooh, sorry. What's happening? Okay. Then I declare and pay the interim. It's done. Do I owe? Then I declare the final. Do I owe? Yes. So in other words, which is the one that goes to payables? The final of this year. Because that interim is paid and last year's final is paid. Everybody with me? Okay, let's continue. Next info they give me is they talk about the net asset value per share. Now they want me to use a ratio. So before I do that, I ask myself, what is the NAV? And by now you know this ratio. It's the girl who talks too much. Ne? She over shares. So can you see, they did give me the shares. And they give me the NAV. Ne? So in other words, what am I able to calculate? The girl, she. And if I look here, where is she? It's this one. Can you see? So it's this one that I'm going to calculate with the NAV. So let's do it. So let's just quickly rewind. The NAV I get through saying shareholders' equity divided the amount of shares in issue times 100. Okay, this is a ratio you need to know. We haven't learned it yet. I'm teaching it to you now. Okay, so NAV stands for net asset value. This is what we say is the intrinsic value or the internal value of the share in the company. In other words, they literally go, look, what is your ordinary share capital and retained income total? You divide it by the shares and you say, this is how much your share is worth at this stage. Okay, I times it with 100 because they gave me the answer in cents. If you look here, can you see it's 675 cents? And that's why I times with 100. If I don't want to times with 100, I will say 6.75. Okay. So, yes. Yes. But you will see shares and dividends, they will usually give it in cents. That's the way they write it. Okay. So now they tell you the NAV is 675. I don't have the shareholders' equity, but I do know that I issued 150 shares. So 150,000 shares, right? So now I solve X because I want to put X here. Yes?
Ma'am, when we calculate the net asset value in the ordinary shares side, like, I can't link this with that.
Okay, let me show you quickly. Let's say I buy 10 shares at 5 Rand each. That means my ordinary share capital is 50 Rand. Okay? Let's say this is the beginning of the business. This is a ridiculous amount. It's just to explain. So now, the NAV would be the shareholders' equity, because at this stage there's no retained income. So it would be the ordinary share capital divided the amount of shares. Can you see I get the 5 rand? Okay, so that's what my share is worth. Now the company starts operating. It operates, it operates, it operates, it operates. The end of the year, we make a profit. Part of the profit we declare as dividends. What do I do with the other part? I retain it. Okay, now let's say I retained 10 rand. Okay, so now if I calculate the NAV, my shareholders' equity is no longer 50, it's 60. Because it's the 50 rand ordinary share capital and the 10 rand retained income. Now I still only have 10 shares, but can you see now the value of my share increased because of the retained income? And that's how I link it. So now what I do is, if I want to sell this share, I'm going to see if I can get more than 6 rand. Okay? Why? Because my share is actually worth 6 rand at this stage. Its value climbed because now the company has got profit. So now when I sell it on the market, I'm going to try and get as close as possible to 6 and even more than 6. Okay? So if I tell you the market price is now 6 rand 20, you'll be happy, because it means you're going to make a 1 rand 20 profit on the original price you paid. You see? Okay. Let's go on. If I say to you the company is going to issue shares at 5 rand 20, can you see now that 5 rand 20 is now less than the market price, and it's less than the value? Well, will the shareholders be happy with that issue price? No, because it's going to push that market price down. The NAV will stay the same because the NAV is influenced by the capital and the retained income, right? The market price is influenced by supply and demand. So what are people going to do? They're rather going to buy directly from the company instead of on the JSE from existing shareholders. Are you starting to get the link? Yes, it's the average. It's definitely not the same thing as the average price, because what's the average price? It's still 50 divided 10. It's still 5 rand. The retained income has no influence on the average price. The average price is only calculated with the ordinary share capital. Nothing to do with retained income. This is just the value. Okay, so now what are they saying to you? Yes.
Please link also the...
Okay, you have to put it in words. Okay, we'll come back. Okay, so now what are they doing? They're giving me info that will help me to calculate the ordinary share equity, right? Because NAV is shareholders' equity over shares. So if I can calculate that, I know that less than 6,670 is going to give me the retained income. So that's going to be a bagel for you. Okay, so now let's solve X. First thing I see is the zeros can cancel out. Now I know. How will I get X alone? I will get X alone by saying 675 times 11500, or 115,000 divided 100. Both will give you the same answer, which is what? Okay, 7. Okay, So now that 7762 goes there. And let me tell you again, this thing usually counts 2 ticks. They love it, but it only counts 2 ticks. So if you feel like you are wasting time trying to solve this equation here at the bottom, just leave it for now, come back later if you have time left. Okay, so now I need to finish up the balance sheet phase. So let's start. What is my retained income now? Okay. So can you also see if you write a wrong amount there? The wrong amount can't be something like stupid, ridiculous, like 1,000. You don't do something like put 1,000,000 there. I mean, obviously, I'm going to see that you didn't do a calculation. Just do something weird, like saying, the NAV is 675 and the shares is 1,150. Go and times the two. Okay? Just use the amounts that you have, to give me something. Then you have that wrong. But because of this less this, you can have that one right. Okay? So let's continue. Payables. What is my payables? First of all, did I have any accrued expense? No. Did I have any income received in advance? Yes. Did I have any creditors? Yes. Can someone give me the creditors since Mary has got my stuff? The salary and wages. Remember, the salary and wages was all paid, so nothing is outstanding. Is there anything else that will influence my creditors? Did I buy something on credit that they didn't show? Did I pay a creditor that they didn't show? Did they transfer balances? Nothing like that. No. So now I just total. So it gives me something 300. Okay. And now there is no bank overdraft, but there is definitely a SARS. So let's go do SARS. So what do I do with SARS? I say, SARS, I want to see this side. I'm going to put the provisional payments, which I find in the trial balance. This side, I'm going to show the income tax, which I find in the income statement. Okay. If the plus is more, it's a liability. If the minus is more, it's an asset. If it's a liability, it's a payable. If it's an asset, it's a receivable. So can you see you can add it here to payables? I would suggest show it separate that the marker can find it more easily. Nee, either. Nee, my bookie. Nee. So let's go on. So now I go look. Mary, just look for me. Where's my provisional payments? Can I just quickly see? So my provisional payment would be the SARS there. And you know what? They don't have to tell you it's provisional. You have to know if it's in the trial balance, and if they give me a debit and a credit side, and it's on the debit side, then you have to know it's provisional. Okay, so it's 130. Okay, so here goes 130. Yes? They cannot put a payment on the credit side of SARS. It's impossible. So if there's a thing on the credit side of SARS, it means they've already done this calculation. Okay. Then I go look in my income statement. Remember, I did an income statement somewhere here. And there's my tax, 152,700. Now, first of all, can you see your plus side is the biggest? Now you go get the difference, which is 22,700, and you go put it in your liability. So 22,700, liability, it would be 2 ticks. And this would be 2 ticks. How do I know? It's on the debit side. It's a rule. Because remember when we did SARS, I said balance, bank. Ne? And those two can also swap. And then what's the next thing? Bank, income tax, balance CO, balance BD. So it's basically this thing that I'm doing here. So that bank is the 130, it's the provisional. And the income tax is the one in the income statement. Is everybody fine?